Ron Ianieri, Chief Market Strategist at the Options University, live from San Francisco as our guest host. You know, the final hour of selling saw, I mean, people really just running for the exits, Ron. And a lot of people are trying to blame something. I mean, there's so much more than just the frozen credit markets and fears of deep global recession going on here. There were other things, technical things. There were, of course, the margin calls. There was deep hedge fund liquidation. And some other people are pointing the big fat finger at the ban on short selling being lifted. But you say, actually, it wouldn't have been so bad if there wasn't that ban.
You know, it makes sense that when you think about it on the surface, you say to yourself, if we can get rid of these short sellers, the market would stop going down. But the problem is, if you really understand the market mechanism, the short sellers are essential, especially when the market's selling off like this. And the reason it isn't short sellers is because, remember, the market has been down 7 straight days. The last 6 had no short selling. So all of a sudden we're down one more day and now it's the short sellers. The fact of the matter is, when the market trades down like this, short sellers provide stability on the way down. The reason is because in this point in time, no one else is out there buying except the shorts who are covering to lock in their profits. They pick strategic levels to buy when the market goes down. And here we are at a support. And we blew right through support today because there were no short sellers lining up on the support level to try to buy. And on top of that, you can't have a short squeeze without shorts, so you can't bolster the market up without shorts.
Okay,
it's
so
an
now we
important
can
mechanism. They're missing the point.
So now we can do short selling again. The ban's been lifted. Will that provide a certain amount of stability?
I think it will. Well, remember, you got to get the shorts back in the market. Today's the first day that they were able to short again. And, you know, my thing is you've got to have them in there. So they're going to probably start establishing positions over the next couple days. The sell-off had nothing to do with the short sellers. The sell-off today had to do, near the end of the day, with the margin calls hitting. And what happens is as those margin calls hit the funds have to get rid of a lot of their holdings to generate cash to cover their positions. And as we're starting to see redemptions among individual investors pulling money out of those funds have to sell parts of their portfolio, basically exasperating the downward turn in the market in order to meet margin and meet redemption. This had nothing to do with the short sellers. The short sellers will add stability to a downside drop. I even said that, hey, once they sat there and eliminated the shorts, I said, once these shorts are out of the market, you have just guaranteed a crash. You've increased the probability of a crash by doing that.
In terms of further confidence-building measures, if we do get confirmation of this U.S. Treasury plan to inject capital directly into the banking system, how big a positive impact could that potentially be for our markets?
Well, you know, right now, again, I'm just not believing in the ability to just throw liquidity in and make things okay. I think we've already probably put too much liquidity in, because if we do get the pump started, this is probably a better way of doing it, but if we do get the pump started, then we're going to have a glut of money out there, and we're going to have inflation issues. Right now, the only thing holding back inflation is the fact that we have a global economic slowdown. Once we get out of that, now we're going to have problems with inflation, because there's going to be, like they say, too many dollars chasing too few goods. I think it might help, and it would have helped a lot more if they would have done this to start with, instead of pumping billions upon billions, if not trillions, of dollars into the economy. But right now, I think that you've gone too far. You've let it go too far. It's got to run its course, like anything else. It's got to run its course.
Ron, we'll talk more about what's going to happen tonight. G7, boy, they can't pass up that opportunity to come out with something good. Ron, we'll get back to you. Ron Ianieri, Chief Market Strategist at the Options University.